We're almost at the end of 2024, so we still have 1 month left where we can talk about 4 stocks to buy or put on your watch list. Now, I'm not going to waste your time, so here are the 4 stocks that we will cover in this video. Hopefully, you'll stay for, well, the rest of the video and the information provided. We'll really appreciate that. We'll also appreciate if you hit the thumbs up button, subscribe if you're new here as well. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So company number 1 is Nike. Now Nike, we know, has seen some weakness, well, a lot of weakness in the stock, change in management for the company as well. And so maybe right now it might actually present long-term investors with some opportunities. As you can see, year to date, Nike is down close to 27%. It has a market cap of $117.2 billion and a forward PE of 27.7 times. Now, it is not the lowest one, but as you see, fiscal year 2025, analysts are expecting EPS to drop 29.2% and then grow and actually accelerate in the coming 2 fiscal years. This company is also paying a little dividend here with a dividend yield of 1.88%. Currently looking at the average analyst price target, that sits 15.3% higher than the price we're at today. Looking at some pricing metrics compared to the 5-year mean, so forward PE, EV to EBITDA, price to sales, price to free cash flow, they're all lower than the 5-year mean. But of course, the company right now is not or might not seem as strong as before, so maybe it is warranted. I mean, if you look at price earnings to growth, completely different picture here, not the cheapest one and actually quite expensive, 3.13. Now with Nike, the whole story here is if you believe in the turnaround story. New CEO coming in, someone that already knows Nike inside out. Now, turning a company like Nike around is going to take some time, right? If you want to compete with On, with the other, with Hoka, etc., etc., it's not like, oh, today I have an idea for a shoe and tomorrow it's in the store. No, these things take time. And to turn a company like Nike around is probably going to take a couple of quarters, if not more. Now, as you know, the market is always forward looking, so you will not have to wait until, let's say, the end of 2025 to actually see the stock move up. No, if in the coming quarters we already see and maybe hear from management that things are looking better, the stock will already move up. And so if we look at what's expected for Nike with regards to revenue and free cash flow, revenue we've seen, and so free cash flow in the trailing 12 months is $7.21 billion. We're going to use that number in the reverse DCF, but it will be important to note that, well, it's expected to drop 45.5% in fiscal 2025, but then rebound 24.5% in fiscal 2026, and then another 12.1% in fiscal 2027, but even by then, it will still be lower than the last 12 months. Overall, what has happened with Nike in the last 10 plus years? Well, overall, the business has grown, right? Footwear is up 121%, apparel is up 79%, and equipment is up 30%. But here, 23, 24, you can see a decline in footwear. In apparel, in equipment, that is up. But of course, the 2 biggest segments here, footwear and apparel, that's where Nike has been struggling. And that's why we've seen the stock get crushed. Last quarters, these were the numbers. Revenue was down 10% year on year, but gross margin was actually up 45.4%. Net income was down 28% to just over $1 billion. For Q2, they expect revenue to be down 8 to 10%. They expect Q2 gross margins to be down approximately 150 basis points with higher promotions, channel mix headwinds, and supply chain deleverage more than offsetting lower product costs and decreasing benefit from strategic pricing actions. And so if we do a quick reverse DCF for Nike, we're plotting in the free cash flow trailing 12 months number, terminal growth rate, discount rate, we can see that to justify today's price, with, of course, the trailing 12 months free cash flow, the implied growth rate is just 1%. But as we've seen, free cash flow is expected to decrease here on out. And so if we cheat a bit and we plug in the expected free cash flow for, well, fiscal 2025, we see that the implied growth rate to justify today's price is 9.5%. Of course, with Nike, it's really up to you. If you believe that the company can turn it around, they can compete with the likes of Hoka, On, etc., then yeah, then if you take, let's say, the midpoint of the trailing 12 months free cash flow, the growth rate there, the implied growth rate plus the one that we just did for the expected number in fiscal 2025, then yeah, it does not seem that expensive, right? Plus, it is a worldwide brand, very, very recognizable, still has their hands in plenty of sports teams, leagues, athletes, etc., etc. I mean, it's still Nike, right? You go anywhere on the planet and I think you will find folks that know what Nike is. Up next is a completely new company that we have not covered on this channel just yet. We did talk a little bit about that company during the live stream on Thursday, and that's Tidewater. Yes, it's in the energy sector, so you might already have a short answer why this stock has come down quite a lot in the last couple of months. This is a company with a market cap of $2.71 billion and a forward PE of just 10 times. Now, with this company, what's interesting is the following. It's expected to grow quite quickly in fiscal 24, 25, and 26, especially the bottom line. I mean, top line, fiscal 2024, close to 33% year-over-year growth, followed by around 13% year-over-year growth in fiscal 25 and 26. But EPS is expected to grow above 60% for the coming fiscal years. And currently, the average analyst price target sits close to 68% higher than the price we're at today. But I would say that there are just 7 analysts covering this company. So yeah, don't just rely on these analyst price target to make your case. If we look at some pricing metrics, it's quite clear that on all but the price to sales, we are much lower than the 5-year mean. Price to sales, we're a tiny bit lower at 1.8 times compared to 1.9. Now, Tidewater is the premier global OSV fleet. OSV meaning offshore support vessels. They're specially designed ships for the logistical servicing of offshore platforms and subsea installations, from installations through the full service life of offshore fields. So of course, it might not be that interesting to most of you, but these types of businesses usually are quite good if you are the leader there and if you manage all of that correctly, which if you look at Tidewater here, that's exactly what you're getting. Especially right now, you can see that free cash flow in the last 12 months has been, well, the highest it has been, I believe, more than a decade or so. And that's expected to continue to grow. I mean, fiscal 2026, free cash flow is expected to be $614 million compared to now, just under $200 million. Zooming out a little bit more, we can see that this company has seen already a recovery that started back here Q1, Q2 2022. Free cash flow goes up, free cash flow margin went up, total revenue, gross profit margin all made their way back up. Last quarter, they saw revenue increase 13.7% year over year, total costs and expenses up only 11% year over year, and net income has increased 80% year on year. Full year guidance is $1.33 to $1.35 billion in revenue and a 48% gross margin. They now anticipate fourth quarter revenue to be essentially flat, with the third quarter and gross margins to improve 1 percentage point sequentially. And that explained a little bit why the stock continues to go down. They're seeing some weakness, although from a profitability standpoint, from a free cash flow standpoint, they still expect to focus on that. And here as well, we can do a quick reverse DCF. And here the implied growth rate is 0%. And even at 0%, this stock should be 11.6% higher than the price we're at today. And yes, even with a 2% dilution, I mean, we could change it to 3% if you want. And that would mean that, well, this stock should be 1.23% higher than the price we're at right now. This company is also buying back shares. Free cash flow expected to grow more and more. So yeah, this does seem like a company that is quite undervalued. Up next, company number 3, and that's a company that you will have to buy either on the Swedish stock exchange or over the counter, so OTC markets, and that's Evolution AB, gaming, gambling company. So yeah, you might maybe put it in the SIN stocks category, but this one as well has seen its stock come down since, well, the start of this year. Year to date, this stock is down close to 19%, has a forward PE of 13.8 times. But this company is growing and growing quite quickly, top and bottom lines. And so here as well, you might find a bargain. If we look at the average analyst price target, that sits 40% higher than the price we're at today, We have 14 analysts covering this company, 1 with a strong sell, 5 with a hold rating, 5 with a buy, and 3 with a strong buy. Looking here at some pricing metrics, all much lower than the 5-year mean. If we look at price earnings to growth, that's under 1 at 0.84, meaning, well, by definition, this means that it is undervalued. Free cash flow in the last 12 months sits at 1.22 billion. It's expected to be 3.9% lower for the fiscal year 2024, but then grow 16% in fiscal 25, then another 18.7% in fiscal 2026. Overall, it's pretty clear what this business has been doing in the last 10 years. It's been going up and to the right with regards to free cash flow and revenues. So yeah, it does seem like this is a wonderful business. They've got 2 revenue segments. One is the live one, which, I mean, is self-explanatory, and that has gone up quite a lot in recent years. The other one is RNG, and that's the random number generator, and that has been the segment that has been, well, quite weak, although in the last quarter, they have finally seen some growth there. This was basically the numbers for last quarter. They said here, we are beginning to see the results of our incremental improvements in the RNG offering. For the quarter, year-on-year growth is 8.5%. So yeah, maybe if finally that segment of the business can go up a little bit more, then yeah, maybe sentiment will change around the overall business. Now, of course, I understand those that are saying, look, this is a company that focuses on gambling and stuff like that. I don't like that, and so I'll skip it, even though these numbers look quite good. And now lastly, stock number 4, and that's Uber Technologies. Now, Uber, unlike the other stocks, Uber is actually still up 16.8%. It has been underperforming the market right now since, well, it reached its peak back here in mid-October. Uber is a company that has a market cap of $151 billion and a forward PE of 21.7 times. Now here, as we can see, the analysts are expecting this company to grow above 15% year over year when it comes to sales. EPS-wise, 54% year-over-year growth in fiscal 2024, followed by just 12% year-over-year growth in 2025. But then they're seeing a reacceleration in growth in fiscal year 2026 by 27.7%. Now, of course, more recently, what have we seen with Uber? We've seen the stock react negatively to the Trump presidency because, well, there were some articles saying that the next administration is going to be, well, more open to more autonomous driving and all of that. And people believe that that could hurt Uber's business. As I've explained on this channel numerous times, I think Uber will be a platform of distribution where you could order multiple autonomous vehicles. You would be able to order Waymo, Cruise, Tesla, Chinese ones, etc., etc. Plus you also have Uber Eats and all of that, the advertising arm of the company. And to be honest, even if, I don't know what happens, they completely drop the ball on autonomous driving, which I don't think they will, because they're already probably a couple of steps ahead of the competition, which to be honest is not that difficult, but okay. We are going to see signs of this business struggling way before this business goes out of business because of autonomous driving. That's just my opinion. Currently, the average analyst price target sits 25% higher than the price we're at right now. 54 analysts covering this company, 7 with a hold rating, 33 with a buy, and 14 with a strong buy. If we look here at some pricing metrics, also lower than the 5-year mean, or in some cases here the 4-year mean, price to sales is quite close, 3.1 times compared to 3.3 times, but price earnings to growth sits at 0.53. And so Uber, what do we see here? Well, we see free cash flow in the last 12 months at just under $6 billion. For fiscal 2024, it's expected to grow 88.2%, then 22.1% in fiscal 2025, and another 26.3% in fiscal 2026. So free cash flow is expected to grow quite quickly in the coming fiscal years. Of course, the growth rates are coming down, but I mean, above 20% growth, that's still quite a lot. Overall, this business has seen an inflection point here, Q2 2022, when free cash flow turned positive. Free cash flow margin turned positive as well, and since then it's been quite wonderful to see. And of course, total revenue continues to go up. We've seen total trips increase by close to 500% since 2016. We've seen gross bookings increase by 711% in that same period. And so if we do a quick reverse DCF for Uber, we can see that the implied growth rate to justify today's price is just 6.5%. And as we've seen, free cash flow will be growing much quicker in the next coming years. So yes, Uber, in my opinion, is also undervalued. I did make a post on X a week or so ago saying that 12 months from now, Uber stock will probably be above $100. You can bookmark that. And well, maybe I should do a completely separate video just explaining why Uber makes sense and why Uber's business will not be destroyed anytime soon. So yeah, those are the 4 companies. Of course, we can talk about a lot more companies and maybe I'll do more of those videos in the coming days. But those are the 4 companies I wanted to touch on. Interesting companies, interesting businesses, and different industries as well. Leave your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.